Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Just checking to see if our stream is going through today, having some gremlins, so we do apologize. I think we should be up, though, to all of our listeners out there in the chat. You may have to, I think we should be good. I think we are good. So, well, sorry about that, folks. Welcome to Pre-Market Prep. I'm Spencer Israel, and here with Joel Conan and Dennis Dick. And, yeah, we're just going to jump right into it today. We got Phil Davis on at 8:35, so we're going to get him on. But we do have a lot of earnings and a lot of ratings to discuss. So, Joel, let's just get right into it. What do you see in the S&Ps this morning?
S&P futures trading up 375. Had a big range last night. Got down to 21.16 even, and that was right with our 9-day low. Back up at 21.2750. Crude lower, running in a roadblock at 50. Gold and silver mixed. Dennis, how are you doing on this funky Friday?
Doing pretty good. Sounds like Gremlin's back here again, but we'll kick those out of the system here and get us started, and we'll fly through because we're running a little bit late, obviously. So let's jump into it here. And we had some big reports from last night. The biggest of them all was probably Amazon. It's down 40 points here in the pre-market. Spencer, give us the details.
This is what happens when I'm out late the night before. These kind of things.
Where were you? Okay.
Yeah. All right, let's get to
You gotta have a story here at least, because we're all 15 minutes late here now because Spencer's tired.
I don't even
what
have.
were you doing last
It's not even
night?
a good story. I just went out for drinks with coworkers. Brent was there.
Okay, not allowed to drink on Thursday nights. If you can't, come on. When I was how old are you, Spencer?
I'm 25. Give me a break.
I used to be able to, when I was 25 years old, I used to be able to go out drinking until 2 in the morning and still get up. And I was actually, well, 25, I was working at Break Trading. But when I was 22, I was still doing construction. I could go out drinking until 2 in the morning, get up and work on a roof at 8 a.m. Come on.
All right. Q3 GAAP EPS, 52 cents for Amazon versus a 78-cent estimate. That may not compare. However, revenue $32.7 billion versus $32.69. So shares were trading down after hours yesterday from that.
Should I tell the story about when Dennis showed up to the office at like 9:29 and 59 seconds, all hungover?
Joel knows some stuff.
Yeah, he was a young buck.
There was a few late nights, maybe.
Yeah, and he came in there, his hair was all messed up and everything, and I said, "You don't respect the markets. I'm not going to let you trade today." And he just kind of
put me in the corner.
Yeah, he just kind of gave me that sad look, and I let him trade, and I think he lost $4,000 that day. But anyways, Amazon, Dennis, we were wait, 745 was your low print, back up at 780. We were having a quick discussion about the options, and I was looking at the 800 puts, just thinking going about a lotto, and they were priced pretty good. They were priced at $15, so $1,500 you were risking. You needed 785 to break even, so you'd be making a little bit of money here. But Dennis, we talked about the only way to play that is if you could buy the stock. So you buy the put, you're short at 800. This thing drops to 750, 760. I probably would have covered it at 770 and missed out on that move. But boy, oh boy, man, Nick Shaheen and those option sellers are unbelievable.
It is hard to make money buying options, and we've said it on the show multiple times. You know, you can get lucky. You're going to get some hits, but long term, I do believe the money is made in options by selling them. And that's why Nick Shaheen, he's got the 90% profitability over there. Great product that he's got on MarketFi. He's going to be at our he's going to be at our, now I can't think here, Spencer, maybe you're, but anyways, he's going to be in Detroit here with us next month live. So explaining, why you make more money selling options than you do buying options. And it's tricky when the premiums, you're looking at 800 put. And you buy for 15 points. You're getting the direction right. It's moving 41 points in your direction. and you're only making $10. I mean, it's just difficult game to play. So at least, at the very least, I would say, do a spread then, and actually, sell another option against the option that you're buying to bring in some of that premium back, because the premium that people are paying for protection is just too high on some of these issues.
All right. Let's go. We got a ramble here. 8:18. We got
Google,
Google.
Google earnings, Spencer. Let's give them to us.
You caught me off guard there. So I'm
A
sorry. Hold on. Okay.
rough Friday.
Q3 EPS $9.06 versus $8.64.
GOOG.
Yeah, yeah. This is Goog. Sorry. Revenue is 22.45 billion versus 22.05. So that was Goog. Shares were up yesterday. And Goog L reported Q3 EPS. So it's the same thing.
They reported
Yeah.
two different reports?
Wait, no.
No.
It's the same thing.
Spencer, stop
Joel, what are
talking.
you doing? Joel.
Spencer, go take a break for 5 minutes. Google here. Okay, after hours action, Joel. Tell us about. I saw it pop up $30, and then it gave a lot of it back. What's the after hours high?
The after hours high comes in at 827, 785 to 827 on the same bar. That's with the Goog. I don't know what people are trading. I have to stick with the legacy stock Goog. And let's just look at the close from yesterday. We're well above that, 795.36. So long as you stay above that, I think you're good to go to the upside. Dennis, I think that pre-market high of 8:30 even is safe, and I'll give you a chance to get your lunch back.
No, I'm not betting. You're too hot right now, Joel. I can't bet with you right now. Don't fight the trend. And the trend,
Okay.
you won like 3 lunches on me in a row. I need to stop betting. I'm in the hole here on you until you start to go on a cold streak, and that's when I'll strike.
Okay. All right.
Maybe I
Let's
should
move
buy you
on.
steak dinners because you seem to always lose those. So the big bets. Baidu, Bidu, also reported earnings. It dropped, then it popped. It was kind of all over the place here. Should we bring Spencer
No,
back in? Or do you want me to
I
give
have
numbers?
it. I have it. Give me a break. Q3 adjusted EPS $1.49. That may not compare, however, to the 88-cent estimate. Sales 2.74 versus 2.71 as far as Q4 sales. They say 2.68 billion to 2.76 billion is the estimate. That is the low. That misses what the estimate said at 2.89. So the guidance that they have is missed by the estimate by about. I can't do math this morning, but a pretty good chunk.
All right. Got a spike up to the high, and we're trading right near the high at 180.88. Currently trading at 180.06. Don't see much until your 3-day high of 181.99.
Also reporting last night was Expedia, another whipsaw. And you're seeing this as the trend here on a lot of these earnings. They go one direction, there's a fake out, and then they take it hard the other direction. And that's going on the upside, that's going on the downside. You're seeing it happen on a lot of stocks. Same thing with Expedia last night. They report, they hit the stock, and then a few minutes later start buying it up. And what do you know? This morning it goes green here. So some whipsaw action there in Expedia last night. Spencer, give us the
Well,
details.
the EPS missed. Q3 adjusted EPS $2.41 versus 2.47. Sales did beat 2.58 billion versus 2.55. So the sales beat.
Joel?
Throw out the
What was
high.
the pre-market? What was the after hours low?
I'll throw out the high and I'll throw out the low. 137.59 and
Wow,
116, and that was all on just one little bar here.
20-point range right on that bar.
And
That's
we went out at
incredible.
126.42 is where we went off the board. That was right near the high of the session. Good to go above 127 here. Below that, 24.89 was yesterday's low. And boy, oh boy, not much here on the upside. If you can bust over and clear this 130 handle, things look pretty clear up to 133.
If you're trying to play the sympathy plays off of these headline numbers, you're getting whipsawed there too, because Expedia is the leader then. So then you look at the price line, you look at TripAdvisor, and right as Expedia got hit, then they were knocking price line down. But then Expedia comes back so quickly. Then, there's no liquidity at all on Priceline. So everybody who just sold Priceline down 10 points is now out to lunch. And then Priceline starts to pop back up as well. So it's tough to play the sympathy trades, especially on the thinner stocks, when the leader turns around and goes the other way.
And it's difficult trading a $1,500 stock, anyways.
Wow, that's just it. With Priceline, it's always difficult on that one with the sympathy. But TripAdvisor, same thing. I watched trade down a little bit there, and then there's just not a lot of liquidity after hours. So if you're hitting it down, thinking, okay, well, Expedia's down 10 points here, that's going to be bad news for TripAdvisor. I'm going to hit it. Well, look at TripAdvisor, and then it turns around because Expedia turned around, and there's nothing. There's nothing to cover. So if you just hit it down at like 61, down 80 cents or so because you thought Expedia was tanking, then you look and boom, there's nothing on the offer. Now Expedia's going green on you, and now you're in trouble on your TripAdvisor shorts. So the sympathy plays, obviously after hours do work a lot of times there, but with this whipsaw action, very difficult to trade them.
All right, more earnings reports.
Amgen, AMGN down 6 points here in the pre-market. That's a big fall here for Amgen. This is one of your bigger ones, 2.59%. It's one of your biggest biotech companies out there. It's coming down. It's taking out the low of the move here. Now we're trading well below the low just from 3 days ago, which was 157. We're now trading at 154 and a half. Joel, what do you think on this one?
I don't like when they take out the low of a move, and when it
Yeah.
holds up, a muted bounce off there. Really can't get excited about the long sides till we can get back over that former low of the move at 157.80 here. Kind of open up. You can see here on the dailies, not a lot of support in here in the issue. Now that you've taken out that 158 issue level, let me see, 155.26. We are below that. I guess you have to go to the double bottom here near the 153 area. You had a low at 295 and 338. 153 next support in Amgen.
Big reports this morning here. I haven't seen the Chevron numbers cross the tape yet, and they often do cross at 8:30, so they could be crossing in 5 minutes here. But we did get Exxon right at the top of the hour. Exxon Mobil, believe it was light on the revenue. Spencer, give us the details.
Q3 EPS 63 cents versus 58 cents. Sales of 58.68 billion versus 61. So they beat on the EPS. They missed pretty big on the sales, I would say. 3 billion, 2.5 billion.
Such an interesting chart here. Multiple highs just in the upper 87s here from the last month. It's kind of like a little bit of a head and shoulders there. You can see the left shoulder at the beginning of October. The head went up when we got to that spike high of 88.67. And the right shoulder just formed here from 86 to 87 for the last 2 weeks. Now we take out the neckline, or actually we were trading right at the neckline here. Below that, you had a big bar just going back into September the 28th, where we ran from 83 up to 87 in one day. So we say what goes up through an area quickly can come down through an area quickly. So we start taking out those lows at 85 and a half. Could be thinking about the 84 level again.
And currently trading at 85.65. Dennis mentions that one low at 85.43. After that, see ya. I don't know what day was that. The day oil must have been up like $2 or something. Coming back here, you broke out of the bottom of that channel here. Yesterday's low, 86.80, does not look like it's going to come into play. Let's see what happens if it can get above 86. Boy, I think you're going to have a gap here if you want to sell it in the 86 handle.
Got MasterCard trading up at all-time highs here once again. One of the best stocks in my investment portfolio. I've still got it, had it in there for about a decade, and it's been a good one. It's up $1.91 here. Spencer, details.
Q3 EPS $1.08 versus 98 cents. Sales 2.9 versus 2.75 billion. So it looks good.
Joel, what do you
Pre-market.
think? Now you're into no man's land because we're at all-time highs. Can you find us a level?
The only one level I can give you, 106.07. That is your pre-market high, and you backed off only 60 cents from that. So just keep that as a level below 105.51. You have a ways to go to get to yesterday's high, which is 104.30. Let's see what happens. I don't know if this thing is like thin enough to have some paper maybe to hold it down on the open, but for right now, let's see what happens. Nice round number like 106.
Just jumping into a couple other reports here before we talk the big news of the day, which was GE BHI that broke there last night. Just a couple other ones quickly. RCL reported Royal Caribbean. It's trading up $3 here in the pre-market. Closed at $68.05. It's up at 71.50 here right now. Big spike up for this. Spencer, give us the numbers.
Yeah, Q3 EPS $3.20 versus $3.10. They do see their fiscal year EPS at $6 to $6.10. That is in line with the estimate, which was 603. You know what also is weird is J.P. Morgan downgraded them yesterday.
Ahead of time.
Yeah,
That's a gutsy call.
downgrade to neutral and lowered their price target to $73. That was the day before earnings.
Yeah, that's a gutsy call when you see an analyst coming out. You rarely see that analyst come out and do something before the report because if they're wrong, it's going to look really ugly. If they're right, I mean, I guess it looks good, but that's, rare to see that. And obviously, this isn't working out for JP Morgan.
Let's see. You got a pre-market high, a double top. Bases your 15-minute chart, a double top at 71.75, 71.76. You did have a big fall here yesterday. I don't know what that was attributed to. Nothing really clear to lean on here at 72 even. Look at your high, 72.54. That was on October 14th.
So still waiting on the Chevron numbers, but just before that, let's go talk about Baker Hughes last night because this is crazy. I got to stop playing hockey because Thursday nights I play hockey, so I take off at 6 o'clock. And this news broke right around 6:30 Eastern. And Baker Hughes, BHI, was rumored from, I believe, Dow Jones breaking it that General Electric was rumored to be going to acquire Baker Hughes. And you saw BHI just take off 55, 56, 57, 58, 59, 60. It goes all the way up to over $65 a share. So up over 10 points on the rumors that General Electric, of all companies, it sounds like a weird one, that GE is going to acquire them. And then around 7:10, it came out, and Bloomberg, I believe, broke it that GE was not looking at an outright acquisition. They were just looking at doing a partnership. And then you saw BHI tank on that headline. It goes from 65 all the way down to 60. Now we're here. We're hanging out here just at 59.35. We're still up 5 points. So there's this potential partnership on the table with GE, but it doesn't look like an outright buy.
That's what GE needs. To buy an
Baker Hughes?
yeah, that's exactly what they
They're
need.
getting too diversified here again. Well, and I don't think and they've said it's not going to be an outright buy here. So they're talking partnership, which maybe makes a little more sense. Once they started talking partnership, GE stock had actually got hit on these rumors. They're trading down here 28.20, and they bought it all the way right back up. If you look this morning, GE is actually trading flat. So I guess GE shareholders say, okay, we're fine with the partnership. Just don't go pay a huge premium for Baker Hughes.
And spiked down to 28.17, back up at 28.71. GE, just a very unloved stock here. Since its last earnings report, building a wall at 29 here. Three highs right between 28.96 and 29.07.
Give us some technicals on Baker Hughes. I know it was crazy. The volume has been incredible. It's already traded 281,000 shares here this morning. It was trading just hundreds of thousands of shares last night on this news, obviously, or on these rumors here of the GE acquisition. It's trading up $5 still here in the pre-market. Don't you feel like it's still a little bit overdone here for
Ah.
Baker Hughes? I mean, they've already said it's not going to be an outright buy. So partnership, okay, well, I guess that's good for BHI, but is it this good? Up 8.5%?
I'd keep an eye on $60, right? The
I
psychological
think so.
lever.
I think there's some resistance up at 60.
I'll tell you right now, if I had played any kind of lotto calls in this and I see this kind of news, boom, I'd be hitting bids faster than you know what. But big premium on this. We don't even know what's materializing here, if it's a deal, if it's a partnership, or whatnot. So I'd be ringing the register for the stock that was supposed to be taken over by Schlumberger, right? Was it that
Halliburton.
Halliburton? Oh
Halliburton.
my
That
gosh.
was on the table for years, and obviously it didn't work out, and they finally scrapped it because they weren't going to get approval for that. I mean, you think about a GE Baker Hughes, hard to, say, okay, well, that's anti-competitive because there's companies, two different companies, really. But it doesn't look like that's the case, from what GE is saying. It's just a partnership agreement. We don't know what that's all about. So I don't know, $5 up on this. If I was long it, I'd be ringing the register.
Is this like the rumor week of the year or something? I
It
mean,
is. There's so much crazy stuff, and people are crazy. It's been the trade to sell on rumor almost every single time. I mean, to Twitter was the absolute sells. When CNBC kept breaking it there, it went all the way out to $25. Now Twitter's back at 17. Baker Hughes gets up to $65 and change last night. Now it's already back down here at 59. So if you're shorting at the highs on those rumors, you're already up 6 points here. It seems like it's been the play to fade these rumors. I mean, some of them do materialize, and some of them have had some deals, but we've had a lot of failed rumors here out
You want
lately.
the level of the day, the level of the week, the level of the year on the downside now
Yeah,
in Twitter?
yes,
Take a look at 1720 area. Look at
yeah,
all those lows in
right.
there. I think what I will do is mortgage the house, and if it prints 1699, I'll sell the house. But look at that, 3, 4 lows in that area. Another low. Maybe not. Maybe I won't get out after one dip under 17 because it could be the old red dog reversal. But boy, oh boy, sellers are getting tired in this issue. Major support, major resistance. Going to get a move in Twitter here one of these days.
Well, but that move could be to the downside here too, because I think buyers are getting exhausted here too. Everybody keeps buying it up on those rumors, and every time you've bought the rumor on Twitter, you've been punished, really. At least a few days later. And just 2 days ago, we obviously had Betaville breaking that, oh, Disney's back in, and that didn't materialize here. And if you were buying it up at 18 and a quarter on that rumor, the next day already down a point. So it's been the play to sell the rumors on this, and I think there's still a lot of people sitting long in Twitter hoping that there's still somebody going to materialize and buy them. And it might happen. You never know. It could happen. The stock's a lot better priced here at 17 than it was at 24. But I just don't know if that buyer's materializing anytime soon when they're cutting the workforce and stuff. It's telling me that they're preparing to go it alone. And when they're preparing to go it alone, there's still a few people who are sitting here speculating, and those people will eventually probably get washed out, and that could knock the stock back down. So that's why I'm not long Twitter. I kind of don't mind it here at 17. It's starting to get a little bit more attractive. But at 14, I love it. So, I'd love it to get back down there and to get that 14 area. That's where I've played it a couple times already and had some luck. So, 1757, I still feel like this is too many people speculating on the M&A. I'd like them to wash those out and buy the stock from them.
Goldman Sachs maintains a buy on Twitter, lowers target to 22. Oppenheimer upgrades it. What I was talking about here, Tony,
Yeah.
I'm just talking about the lower 17s here. These are the kind of formations that I like to see. 3 or 4 lows in the same area to lean on. Also, it had I don't know, just 17 just seems like the number here, but I'm not going to wait for it to go to 1650 to admit I'm wrong. Someone's looking for some follow up. Bobby bid on Under Armour. Has it been able to recover yet? No. Continue to make a new low of the move yesterday at 30.63. Maybe hold out for the whole number of $30 or at least a double bottom. You've even had two lower highs and two lower lows and two lower closes since that disastrous conference call.
8:35 is about to say, Joel. We're gonna take a quick break. We're gonna grab Phil Davis, founder of Phil's Stock World. So we'll be right back.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. We are on the line with Phil Davis, founder of Phil's Stock World. Phil, how you doing on this Friday?
I'm great. How you guys doing?
Good, good. First off, before we go into individual stocks here, you being a veteran of the markets here, the tech bubble, different things. What do you think about all these rumors, all these mergers and acquisitions, all these things that are going on in the market? Is that anything that worries you?
Well, I mean, it worries me. I mean, back in 2000, there were over 9,000. There were about 10,000 stocks at the time. Now we're down to like, I think it's like 4,000. That's incredible. I mean, we've actually lost half the market to, I mean, some things went out of business, but mostly it's M&A. I mean, companies have been gobbling each other up, and there's half as many companies to trade as there used to be. And it's kind of a dangerous concentration at that point.
Why do you think? So you think that it's just because of M&A? Is there any reason why you think companies aren't coming in? Newer companies, because you don't hear about a lot of IPOs anymore. Like there's not a ton of them, and there used to be a lot more. Why do you think there's not as many companies going public?
Well, this is the problem. In fact, we were just talking yesterday about trust busting. Which is back in the 1890s to the 1920s. Teddy Roosevelt was called the trust buster. And he would they were breaking up all these monopolies that formed, because in every sector, in every business, this is what would happen. They would merge and acquire each other until there were single companies that controlled each sector, and they had monopoly power, and they were pricing. It was terrible for the consumers. It was bad for choices. And then, God forbid, one of these monopoly businesses went out. There's nobody to replace them, and the whole thing collapses. And then the public is unserviced. So it was a complete disaster for everybody except for the people who own the mega corporations. It's exactly what we're doing now. Right now it's just bad, and you can tell from the wealth disparity that things are about as bad as they were before the Great Depression, with just all these giant corporations raking in all the money, squeezing out every small corporation. So regular people, so basically you either work for the giant corporation or you own the giant corporation. Those are your two possible career paths. There's no in between. There's no middle class anymore. That's what's happening. And that's what people are angry about. That's why Trump gets all these supporters who just say, I don't like the way the system is anymore.
Coming out of the chat from Bobby Bid at Phil, and I know this is a kind of a hard question, but are you on the long side or the short side of this overall market, Phil?
Oh, it's not a hard question at all. We're in cash. We don't trust the market very much. We're probably about 80% in cash in our portfolios, but also, though, we're options players, so we are using probably about a third of our margin. So it's a little bit more margin than cash. And we have plenty of long plays that have very good leverage that will do very well if the market goes up, but we're expecting at some point there'll be a decent correction.
When do you think, because the last 7 years, we've pretty much been in this relentless bull market. I know we've paused here in the last year, and a lot of people think this pause might just be for the markets to inevitably go higher here again. I mean, once we get past the uncertainty of the election, why do you think it could be different this time, if you think, the market's going to pull back?
Because we're in a bubble, basically. And the bubble is being caused by the free money. Look, you talk about the M&A, right? You have these companies buying things for ridiculous amounts of money. The deal's going through. But the reason they can do these M&As at such high prices is because they're only paying 1% to borrow money. These companies can sell bonds they can sell 20-year bonds at 2% or whatever to finance these acquisitions. Of course, that makes sense. As long as the company they're buying makes more than 2%, why wouldn't you buy them? It pays for itself. So it's an artificial environment that's driving this market, and the same thing goes. That's on the macro level, you can see it, but when you get down to the investor level, it's the same thing. You're getting zero returns in the bank. You're better off buying a dividend stock, no matter what the PE ratio is. So even though the company doesn't make enough money to cover your money, your alternatives are so limited that you put the money into it. But when the Fed stops pushing the rates down and we start moving towards normalized rates, then money will come out of the market and there'll be a gigantic hole that's going to collapse, and companies will have to go back to their regular values.
Couple questions here, Phil. First of all, and boy, I haven't heard the term M2 money supply in the longest time. Remember when that used to be like the big indicator? Like, oh, was the money supply up, money supply down? And it used to actually move the market. But Fiat from the United Kingdom wants any thought of the value of the market versus the M2 money supply.
Well, I wouldn't say the value of the market, but what you have to understand, this goes back to the Fed problem.
Okay.
The money supply is massive. We've more than doubled the money supply since the crash. The problem isn't the money supply. The problem is the velocity of money. The money is not moving. The problem is that the Fed is doing a top-down feed of money. So all the money that's increasing the supply is being given to rich people and being given to banks. The rich people through pushing the stock bubble, the asset bubble, which only really benefits the top 10%, and obviously to the rich top, the major corporations are like rich people too, and giving them money to do stuff with. They mostly put it in the bank or put it in, or it runs down as profits, and it doesn't filter into the broader economy. So that means that the velocity, you could have an infinite amount of money, but if the velocity of that money is zero, then you have no economy, right? So that's what's going on. They've doubled the money supply, but the velocity of money is so low that it has no effect. But what's happening now is wages are rising, okay? Because we had a little worker revolt in America that people hardly paid attention to, but they're passing minimum wage laws everywhere that are pushing the wages up to $15 an hour. That's going to drop money from the top down to the bottom, and that money has a 3.5 times multiplier effect. When you give money to people in the bottom 50%, it moves 3.5 times through the economy. So that's going to drastically increase the money supply, and that's going to bring about some real inflation numbers. Like inflation is going to pick up very quickly over the next few years. The Fed has no choice but to raise rates. And as the Fed raises rates, like I said, money comes out of the market and goes into nice, safe bank accounts and bonds and so on and so forth.
Phil, talking about inflation here, and this is something, that I've griped about on the show a number of times here. They tell us that, there's no inflation. Some people even fear about deflation. Yet I look at product size, and product size continues to get smaller. So, the one example that I gave, I have a 1-year-old at home, and they were eating, and eats baby formula. And, well, this was last year, so he's not eating baby formula anymore, but he was. And the container they advertise, and I forget the kind of the food, but anyways, it's the baby food, and it was 660 grams of baby food in there, and then they say, oh, new sleek container, but I look at the new sleek container and it says 600 grams. I'm like, well, the price is still the same, so they just dabbed me for 10%. Yet that stat will show that there's no inflation. What's that?
I said they're ripping off babies.
They're ripping off babies here for 10%. Like, do you think I'm stupid? Like, is this a consumer that dumb to not see that, hey, they just shrunk the product size 10%. They're putting 10% less product in this container. Yet in the inflation stats, that won't show up. So there's so many ways that they're hiding inflation, even though it's actually already creeping in.
Oh, not only that, but like an iPhone was $600 a few years ago, right? But now it's $900. But because the processor is more powerful now, the Fed, when they calculate the inflation, they actually take into account that you're getting more processing power for your money, and therefore they consider that lower. They actually count that as your $900 phone is considered cheaper inflation-wise than your $600 phone because it has a better processor in it.
That
seriously happened.
It's all smoke and mirrors, I feel like, our inflation stats. I feel like we already have inflation here.
Little breaking news on N here. Just real quickly interrupt you guys. NetSuite, it looks like this deal's falling apart. Spencer, what do you got?
Yep, looks like it's falling apart. We got a board, a letter received from T. Rowe Price stating the firm is willing to support a transaction in which Oracle offers $133 per share for NetSuite's shares.
Oracle's not doing that.
Oh my God!
NetSuite filing shows. This deal is falling apart. Yeah,
that's ridiculous. That's terrible for shareholders here too, though. So maybe they listen to our inflation and they're trying to get more inflationary price for the stock. But anyways, obviously.
Let's remember it's an $80 company before the buyout rumor. Now they're a $100 company and they want $130. So they want another 30% on top of the 25% they already got.
Inflation.
Let me add to that. NetSuite filing shows that if the majority of the company's unaffiliated holders do not tender sufficient shares to reach the condition, Oracle will respect the will of the company and terminate the proposed offer. These are two headlines I just read from Benzinga Pro. So.
How many times have we talked about when these deals are announced and you get these pops in these stocks? If you just
Ring the
hang,
register.
yeah, ring the register. I mean, if you hang
Hmm.
around for Monsanto to go to 150 or all these things and these kind of things happen. But I want to get that breaking news in before we let you go, Phil. We got the chat is just buzzing here, and Bobby Bid wants to know what kind of options are you buying or selling in this low volatility environment.
Well, we're options traders. That's a pretty broad question. Look, one thing I like very much is I like the long term as a hedge. This is my public service announcement. TZA, the Russell 2000. You can buy the TZA 2018 $30 calls, and you can sell the 2018. I'm sorry, not the 30s, the 25. You can buy the $25 calls in 2018. They're trading at $9.50, and you can sell the $40 calls for $1.50, and that nets you into the spread for $8, into a $15 spread for $8. Against that, you can sell some short-term calls like half covers to pay for it along the way, and that'll give you a hedge that will last you an entire year. Of you'll make 2 times if the market goes down. Those are the kind of hedges we like to have, because that way, at least you're going to get, if you put 5% of your portfolio into a hedge like that, you'll get 10% back at least if the market goes down.
Yeah, that helps a lot. Also, just before you came on, you were talking about some bargain stocks that you like right now. Right before we let you go, just give us a couple bargain picks here, Phil, that you're looking at right now.
A couple of bargains would be, I'd say Ford is really nice right now. It's on a good sale. SunPower actually got very cheap. We like it. Chicago Bridge and Iron. If you think Hillary's going to be president, and I don't see any other possibility, then you got to look for some infrastructure spending, and the infrastructure spending is going to benefit Chicago Bridge and Iron. Oh, Cleveland Cliffs also. CLF also went on sale.
All right, I've been on the line with Phil Davis, founder of Phil's Stock World, giving us some good strategies, great outlook on the market. Phil, it's been too long since we had you on. We're going to get you on again soon, okay?
All right, great. Nice talking to you guys again. Have a good day.
Great,
Thanks, Phil.
yeah, great energy there from Phil. You could tell he's been around the block, and then when that deal was, he was just laughing, and so were you, Dennis. With 110, they get a deal. They're gonna turn it down. They want 133.
They mess up these deals so many times. You see this happen. They mess up. I mean, Hershey was the same thing. Hershey wanted more money from, and who, I don't even remember who was buying them before.
Mondelez.
Was it Mondelez? They wanted more money, and that's what you get. At the end of the day, well, you don't get, what you want there, and then 115 down to 95. I truly believe Twitter might have been the same case too behind the scenes. Here, maybe you had some suitors that were willing to pay $20, and the stock popped up to 22, 23, and like, we're not selling for you at $20. Now our stock's at 23. And now it's, all the people have walked away from the table and they're not coming back. So, or they don't appear to be coming back. So as these companies appear to get more greedy, they just hurt shareholders. And NetSuite had a good deal here. Oracle had a good offer there. Its stock's trading up at 110. Everybody's happy. Now it's back down here at $87 here this morning. The deal's falling apart, and you got nothing. So, I mean, I guess, they think they can go it alone, but you're asking, for the world at 133, and you're not going to get it. Maybe if you ask 115, maybe you're going to, or I don't know what the original offer was, but the companies are a little bit too greedy, and it's hurting shareholders.
8:51, Dennis. We got 9 minutes. We got to rip through some more stocks here.
Well, I'll quickly look at imbalances here. I don't think we got to them yesterday because it's an earnings season. We don't get to everything. General Electric is 149,000 to sell. That is just interesting because obviously the rumors here with Baker Hughes here, the rumored partnership agreement here this morning. So I'll just quickly look at Baker Hughes here too and tell you that it has 20,000 to buy. It's very early here. That's probably going to grow. Stock has come back off those highs. Now we were talking about it at 59.5. It's now trading at 58.5. So it is coming back down and coming in a little bit there. Joel and I still like the $60 resistance area, even though it was trading up at 65 there last night. We did get Chevron numbers too, CVX, and we did not get a chance to jump into that report. Exxon obviously missed on revenues. Spencer, quickly give us those Chevron numbers.
Yeah, looking at Chevron right now, we got Q3 EPS 68 cents, sales of $30.14 billion versus $29 billion.
So they beat on the revenue. And Chevron is trading slightly higher here in the pre-market. But again, a lot of these big, even the bigger companies, sometimes, they'll trade a little bit more with oil than, even with their own earnings sometimes. Oil is weak here today. And I think that's a little bit to do with why Chevron can't really get up and kick-started here. ConocoPhillips also caught an upgrade today too, and they're trading a little bit higher after their report. I believe it was yesterday. So Conoco with a big pop yesterday. A few people coming and fading, but there's an upgrade on that, so it's coming back up a little bit today. Exxon going in the opposite direction, obviously, as that stock disappointed on revenue.
S&P futures trading up 2.25, 2125.75, 2330, 2130 is my level on the upside. That's your daily pivot. Almost got there, only went to 2950. So keeping an eye on the 2130 level here. So let's follow up on some stocks. Amazon is trading down here. Dennis down 25 points. So I guess you could have made
45.
Yeah, 45. I'm sorry. I'm still thinking from those 800 puts I almost bought. But trading down here, what you looking for Amazon? You looking to trade that today, or just let them?
Amazon is the ultimate people who come in to buy the dip. What is the after hours low on Amazon? I don't know
Yeah,
if we said it.
7:45, Dennis. I'll go steak dinner. We don't take it on.
745 is way too low. 750 was absolutely huge and, cut through there. So if you were, going down there and saying that 750 is going to be the bounce level, you're already being rewarded with 25 points. And I'm not, Amazon, it seems like buy the dippers always seem to come into this stock. They've already come in for 30 points. So I guess, they've already kind of bought the dip. So I don't know if it's going to continue to go higher here or not, but it's so hard to bet against Amazon. I've seen them disappoint the street before, and the stock comes back in 2 days. I don't know if that's going to be the case here or not. Obviously, it's starting to get a little bit more priced with a valuation issue here, but I'm not betting against Amazon. That has always been a losing bet. It seems like forever.
Let's talk about Apple here. The post earnings move. Man, they hit it, but they can't really bust it here, Dennis. Big move up. Got a key level here in Apple for our traders. We had that low from the day of earnings, and we haven't taken that low out. That low was at one.
That's the key.
Yeah, right there, 113.31. That was in between a pair of lows from October 6th and October 7th. So that's a level I'm keeping an eye on today to see, let the street decide what's good and what's bad there for Apple.
That's the number two. If I was long the stock, I'd be leaning on the 113. Takes out 113, I'd probably, and I am long the stock in my investment portfolio, but I meant if I was long for a trade, I would probably, if it cut through 113, be a little bit nervous there. So gets above yesterday's high, then it starts to think about filling the gap, and I wouldn't be surprised if strength does flow back into Apple here. It's still out of all your, tech companies there. I still think Apple has the best bang for your buck from a value perspective. Baker Hughes is really starting to leak here now, Joel, and I wish we would have just maybe been shorting it up there when we were talking at 59.5. It's now at 58, and now just cut under 58. It's trading the 57 handle here again. So BHI really getting the beats here just a little bit after trading up over $65 on rumors last night. The GE, like who's buying? This is what drives me nuts. Who and I guess it's a good thing, because it offers us opportunities there as traders. But who buys something up 10 points on a rumor? And a rumor that's kind of, sure it was Dow Jones, good source, but still, like 10 points off of Baker, General Electric really going to come and buy Baker Hughes? You got to put some logic to these things when you're thinking about them as well.
I mean, they're still reeling from the financial crisis. Do you think they just want to just hop into the oil crisis and?
Well, and they got so and they jumped in and they were all into the financials there, and they finally had to get rid of and they spun off SYF to try to get less diversified, and now they're going to come up and diversify themselves further again. GE had a problem of being too diversified. That was always their problem, I thought. And now you're going to jump in Baker Hughes, and I'm sure there's some synergies with some of their businesses. They're still a big conglomerate with a lot of different businesses there, but I don't see that materializing. And is a partnership agreement really worth that much? That's why, I challenge, BHI trading up towards 60. Now it's at 58. It's starting to come in a little bit. I think it's probably going to hold on to some gains here because it was trading at 65 last night. Imagine you got short at 65. You're probably, covering it here too. So hard to be, bearish here now that it's come 7 points off the highs. But man, if you're trading these things after hours and you're jumping in and buying things up 10 points on rumors, I think you're doing it wrong.
Someone in the chat here, let's see who it was. Fly KLM, new to the chat. Can anyone remember Phil's recommended option trade? It's kind of like a Nick Shaheen trade, but it was in TZA and it was selling a or was buying a call spread, but financing it was selling some in the money calls, wasn't it? Can anybody remember that? That was around 8:45 of the
You,
show.
you,
8:40.
you can also rewind now, but benefits of YouTube Live, you can just rewind, the video.
Yeah, I was saving them from rewinding, and I can't remember. I have the goldfish 6-second memory, so I don't remember that
I'm
either.
with you, Dennis.
8:57. S&P still trading up 3 points. Weekly option expiration. I got to get some bids in here at 3, 4, and 5 cents on some stuff. Maybe catch some lottos. If you're trading in the crude market here, keep a close eye on the $49 level. A trio or two lows the last 2 days. 887 and 885. You also had a low at 885 on October 4th. So that's something to keep an eye on as well. Dennis, any final tips for this Friday of trading?
Uh, just watch the rotation here. There's been so much rotation into different sectors here. The one sector that continues to just be relentlessly strong is the financials. Morgan Stanley making new highs on the move yesterday. Bank of America making new highs on the move yesterday. J.P. Morgan making new highs on the move yesterday. Citigroup breaking out over the critical $50 resistance yesterday. It did close below it there, but Goldman Sachs making new high on the move yesterday. The only one that isn't obviously is Wells Fargo, but it had a pretty good day too. It was trading higher as well. So your financials continue to show relentless strength here, and that's probably just due to the fact that people think interest rates are going up sooner than later.
Spencer, how do we get the YouTube recording? So that's a question in the chat from Spice.
Actually, the stream records automatically to YouTube. So I upload the show to SoundCloud and iTunes and Stitcher, but the stream is posted automatically to the Benzinga TV YouTube profile. So if you just go on YouTube and go to search for Benzinga on our profile, you'll find it.
All right, Spencer, before you go take a nap, would you like to wrap up today's show?
Sure. It would be a pleasure, Joel. On Monday, we've got Gary Kay, who is just as animated, if not more, as Phil Davis. So looking forward to him, and Michelle Krebs. She's kind of our go-to auto analyst, and we did have the autos report this week. So looking forward to her analysis on Ford and GM, and maybe even Tesla. If you missed any part of our show today, like I just said, you can catch the whole thing again on our podcast. We're on iTunes, SoundCloud, and Stitcher. Also, the show is recorded straight to YouTube on the Benzinga YouTube channel, so you can check all that out there. Reminder to check out Benzinga Pro. You can get a free 2-week trial by calling us up at 313-960-4070 or going to pro.benzinga.com. If you mention you're a listener to PreMarket Prep, there is a discount on an annual subscription. But again, free 2-week trial for Benzinga Pro. Don't forget to check that out. Also, just about 2 weeks away now from Joel and Dennis's 2-day trader workshop. You can check that out on the Eventbrite page. Just Google Benzinga 2-day trader workshop for that. Please always remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. So that's it for us for the week. Bit of a crazy week here. How are we doing on NetSuite right now, guys? I just want to get one last update before we go.
The deal off the table. Let's go to the pre-market chart and see what's going on with the greedy shareholders. Hit 85.10. Got a little bounce here, 89.5. The only problem with this, if you're thinking of going out and scooping it up, is you got a lot of people regretting that they didn't sell. And also, what's kind of interesting here is the daily chart gave you a little bit of hint, right? Holding up at 110, 110, 110. All of a sudden, you gap down and then drift lower. So, street ahead of it on this one. That's our show for today, folks. Thanks for being so patient. We'll be back with you on Monday morning.